Good evening, all our viewers. We have with us our Vice Chairman, CA Rajendra Kumar P, and two learned speakers we have invited for today's discussion. CA Ganesh and CA Aishwarya Agarwal, a faculty from the Eastern Region, Rahul Kela. Both the speakers have experience on speaking number of seminars and conferences. And today's topic, which we have kept, is the works contract implications of GST. Number of things has been changed from the earlier tax regime to this current tax regime, that is GST. Both the speaker will touch upon these topics. And let me remind all our viewers, we try to do this webcast every week. And so far we have done 5-6 webcasts. Topics which we are as the opportunity to write the topics on which, so we can plan accordingly. And please be always available to us every Wednesday. It is scheduled. If something technically is not available, then it may change. But otherwise, every week, Wednesday, 5 to 7, this webcast from GST committees are scheduled. So all our viewers may note it. Even you are not receiving any invite, you can look for the login for the same. So GST, we always are growing and we are moving in right directions. On 22nd, the next GST committee meeting, council meeting is there, and we all are hoping that a good number of reductions in rate are expected. Also, at the same time, some sort of amnesty scheme is also expected by the taxpayers. That time will say. So before I request the faculties to take the sessions, I'm requesting Rajendra Kumar P, Vice Chairman, to the committee, give the brief introduction of both the faculties as well as his opening remark from the Vice Chairman. And I think all our viewers must remember, Rajendra Kumar P is the Vice Chairman this year, but previous year he was the Chairman to this committee. So we change the guards as and when required. But he is as good as Murthy.
Thank you, most honorable chairman and one of my mentors in the GST and Indirect Taxes Committee, CA Sushil Goyal ji, who is leading this committee by example. In fact, he has spent his almost entire life in indirect taxes as all of us, at least in the committee. And see, Sushil Goyal ji, for almost since the time the GST was launched, has been very actively engaged, very deeply and intensely engaged in the practice of GST. And he connects with every audience through what is known as tips on GST. There's one post which many of you are connected to him. You will get it from him, tips on GST, in which he gives significant issues and those which are very useful to all of us. Thank you, Sushil ji, for being a motivational force for all of us and being a role model as to how a committee has to be run. Esteemed friends, today's speakers are Ganesh Prabhu sir and Aishwarya Agarwal sir. From Ganesh Prabhu sir is from Chennai and Aishwarya Agarwal sir is from Rourkela. Both are significantly important cities in India. Both have their own USP. Both cities are known for the industriousness and esteemed friends. When I talk of works contracts, when I read works contract, my very close interaction goes to the city of Chennai, the state where I belong, Tamil Nadu. Because if for any reason works contract was levied under the sales tax, it was Tamil Nadu. Because Many people were thinking it's only a service. Why there should be a tax on a sale as well as works contract? Is because goods are involved. Of course, the matter then went up to Supreme Court, and Supreme Court finally upheld the levy. So Tamil Nadu can be uh, told as the father of the levy of sales tax on works contracts. There are many issues in sales tax, many issues are in VAT, many will be in GST. We have experienced faculties Ganesh Prabhu and Aishwarya Agarwal, both of them practicing the subject of GST for more than a decade now, almost a decade. Both of them are regular faculties. Both of them have that passion to teach the subject, passion to impart to the students or people like us the nuances of the subject. And both of them have been very actively engaged with the GST and indirect taxes committee. I welcome both of them. I thank them for being speakers today. And I'm confident we are going to have a treat for all of us. We have Impreet from our committee, who is, I must tell you, hats off to her. Week after week, she is behind my neck to do this, or rather, I am behind her neck sometimes to do this. And we have our secretary, Smita Mishra, of course, is not present here today. And Mohit is a technical support. And, above all, of course, Chairman Sir is there always to guide us. So, CA Ganesh Prabhu and CA Aishwarya Agarwal, the floor is yours, and all of us are eagerly awaiting to hear your treatise on this subject. Over to you, Ganesh Prabhu sir and Aishwarya Agarwal sir. Thank you very much. Ganesh Prabhu sir, you can commence. Thank you.
Thank you, sir. So you're mute.
A very warm welcome to all the participants. Chairman of Indirect Taxes, Sushil Kumar ji. Vice Chairman of Indirect Taxes, Rajendra Kumar sir, and who is guiding us in terms of the indirect taxes and consumption taxes in particular. It's been a proud privilege to be part of the learning sessions of the Indirect Taxes Committee, and more precisely today on a very intense topic called as works contract. In fact, as very rightly been pointed out by on the opening remarks by our beloved RK sir, the Madras High Court in its initial days, more precisely on Gyanan Dunkley Limited, laid the foundation stone in connection with the taxability of a works contract, where starting there, the distinction between the term work contract and works contract initiated over there, and a lot of erstwhile the then decisions of the Australian sales tax or the US sales tax were the basis of deciding on the taxability of a works contract, and starting there the decisions were being on different note. Today, as part of the discussion in connection with GST implications on works contract, we have shared the topic among ourselves, initial discussion on the taxability associated with it, whether it would be considered as a supply of a goods or a supply of a service, and the time of supply, value of supply aspects, including the reverse charge aspects associated with it, are discussed by me, and the rest other topics would be handled by the beloved co-speaker of my session. The term works contract is precisely defined under section 219, more particularly to mean that a contract for construction, erection, commissioning, installation, fitting out, repair, maintenance, alteration, all this done more particularly on an immovable property. If all this is done on any immovable property, then yes, it would be considered as a works contract service, wherein there should be a transfer of property in goods involved in execution of the works contract. To put it in very simple way, there is going to be a contract for any of the activities of repair, maintenance, construction, whatever be it. And this is going to be happening on an immovable property. And there is also going to be a transfer of property in goods. In nutshell, there is a movement of goods from the supplier to the recipient, either in the same form or even not in this different or in a different form. Then that contract would be called as a works contract. In fact, just passing out here and we go back and learn some of the pre-GST legislation, there would be a broader differences between the way in which the said definition is being defined. Almost the crux of the definition remains same, no different, but the term works contract earlier during the pre-GST regime not only refined its discussion only to immovable property, it also extended its wings to movable properties. So that was that in fact that created lot of debates over there, whether it is a supply of a service or it is a service or it is a goods, and all these aspects were being discussed left, right, center. To put an end to all these discussion, very precisely, the lawmakers, when they defined, they restricted the whole discussion that it is going to be only in connection with immovable property. So there should be some sort of an erection or an installation onto any of the immovable property. Not only I provide my services, I also transfer some of those goods over there. Then naturally, yes, it would be covered under the definition of the term called as works contract. The moment that we agree upon to it that yes, it is a works contract, one of the important question that comes us to us is whether this works contract, is it a supply of goods or is it a supply of a service or is it a sale transaction or it is a contract for service, what it is. Now, there were enough debates that happened over the erstwhile pre-GST regime. More precisely, Section 7 through Schedule 2 makes no doubt this contract is a contract which involves both goods and services. In fact, it had a very precise entry number 6, which comes out and says the following composite supplies shall be treated as a supply of service. I supply emphasize to this word called as shall be treated as a supply of service on that the first item to be discussed before restaurant services could be works contract service as defined under clause 119. So this is where the importance of the definition also comes where over here, that the moment something is a works contract, it is deemed under the GST law that yes, it is treated as a supply of a service. Why? Because under the erstwhile regime, there were enough confusions whether it is a supply of a goods or it is a supply of a service or what it is. So to put the end to all these discussion, they made it mandatory that yes, it would be treated as a supply of service. Now, the moment we said yes, it is a supply of service, then naturally the section 7 in its full swing will take over the applicability of the term supply. There is a form of supply of service. It is made or agreed to be made by a person for a consideration in the course or furtherance of business. Then every single works contract that is signed. It could be a construction of a commercial building for a rate contract. It could be a construction of a tunnel, bridge, or it is going to be any of those works, or it could be as simple as a laying of a road for the public work department, or it could be the maintenance, repair and maintenance work that is being done to an existing building, or it can be a
Excuse me,
fresh construction.
Ganesh sir, can we wait for a minute? there's some technical issue. Audience link is not working. I mean, voice is not there. Just give us 2 minutes.
Okay.
Voice is not there since beginning, or it is right now?
Just right now.
Here. Next. What is next? তুমি কোথায় ছিল? কেন তুমি তোমার দেখতে হবে না কি করছো অফিসে, কি হচ্ছে?
Sir, mute करना पड़ेगा. सुशील sir.
তুমি রিসেপশনেই থাকুন, এখানে কেন এসছো? করতে পারো। আদিত্য,
Sir, now it's done. I mean, the fault is rectified, sir.
Okay, I'll proceed. So coming
Just
back,
take this slide again.
I have to take this slide once again. So all of us would be agreeing on to a common understanding, which would be that the moment it is being considered as a service, the complete debate comes to an end. In fact, so all the pre-GST regime litigations were revolving only around whether the particular transaction, which is a works contract, is it a supply of a goods or is it a supply of a service? And having the constitution amendment and we have enough decisions under the erstwhile pre-GST regime which would come out and say, yes, a few contracts are being identified. This cannot be taxed under the heading sale of goods. Sale of goods is something different and works contract are something different. In fact, I'm sure all of us are agreed only to move forward in that aspect. The 46th Amendment to Constitution of India is done by inserting clause 29 capital A to Article 366 to ensure the taxability associated with works contract. The next set of debate that started during the service tax regime is works contract involves an element of service? If so, it involves an element of service. How much is the portion of the element of service in connection with works contract and how much is going to be something to do with goods? So all these debates were there under the pre-GST regime. To put an end to all this, precisely in Schedule 2, the term service has been, works contract has been added as part of the term service. And today, all that we have is if somebody is involved in a works contract, then yes, no doubt he is engaged in supply of service. I still agree there are somebody who can come out and interpret it more hyper technically, not simple technically, more hyper technically, that there are three species to be taxed. One is goods, one is service, and the third species is called as works contract. Parking those hyper technical interpretations that are always exist during any taxation regime, getting into a simple understandable issues in connection with the term works contract, yes, a repair and maintenance of a building done by a contractor would be covered under the term works contract. It could be construction of a bridge would be covered under the term works contract. Somebody who signs up a rate contract for constructing a building would be covered under the term works contract. So the examples can be so specific that it is not only limiting to something to do on the civil side, even erection, commissioning, installation of some of the plant or equipment where post installation the equipment becomes immovable property in nature, the said activity would be covered under the term works contract services. And when it comes to its taxability, we are very clear. The moment this works contract service is provided, yes, if it is provided for a consideration, it would be leviable to GST. Quickly getting into the time of supply associated with works contract. I'm sure all of us would be agreeing that Section 13 of the CGST Act precisely discuss about all those services provided by the supplier would be leviable to tax based on the time of supply. Usually, the time of supply is going to be the day in which invoice is raised by the supplier or the date of receipt of an advance payment of these two, whichever is earlier. But to be precise, in connection with majority of the works contract, there are always a mobilization advance that has been paid as part of almost all major works contract. Now, in this model, on receipt of the mobilization advance, the respective organizations has to ensure that they discharge their GST liability on the advances that they receive and issue proper documents for it. More precisely, advance voucher, advance payment voucher has to be issued by every registered person who receives all these advances. At times, few organizations, because of the lack of understanding, they try to raise invoices for the advances and land up paying twice in connection with all these aspects. The advance received would be liable to GST, and the day in which they receive the advances would be the time of supply in case of advance received. Coming back to its billing model, majority of the works contract operate on a billing model called as RA bill accounting or running bill accounting model, where there would be RA bill 1, 2, 3, so on and so forth. And the mobilization advance or the initial advance that have been given is adjusted for various billing that at times if the contract runs beyond a financial year also, it would get adjusted. A detailed documentation in this connection or maintenance of a detailed documentation in this connection of establishing the running account bill up to date, what is the billing value, would be of immense help to the respective organization in discharging the tax liability appropriately. To put an end discussion to the time of supply, all those invoices that are issued by the respective organization would be taxed by them. In case for any of the projects, any advances that is being received initially, they would be liable to pay taxes on the receipt of advances received by them. At times, organization sign out certain contracts which does not have a precise payment due date. Take up a situation where a rate contract for construction of a building is signed by a contractor, and this rate, the exact point of time when it has to be built, usually every contract has a milestone of billing. Maybe, for example, from a civil construction perspective, on completion of the foundation, X percentage will be billed. On completion of up to second floor walling, X percentage will be billed. On completion of sixth floor, on completion of MEP, on completion of tiling. So there are milestones that are fixed at times, not based on the time zone, but based on the activity which is associated with it. And many times the billing is based on the 20% billing by the contractor to the respective person is based on this particular activity. If the due date can be ascertained through that, then that would become the time of supply. At times, the said due date, or to put it in a different way, if these milestones are not forming part of the agreement, then the day in which they receive the payment, that would become the time of supply. Something very interesting to note over here is almost all works contract are done for a tenure of beyond 3 months. So every works contract would come and fall under a particular definition called as continuous supply of services. Now, when it comes to continuous supply of services, the only distinguishing factor in the in the time of supply is in case of all services, we would wait until completion of a service. Whereas in case if it is a continuous supply of service, the obligation to raise invoice will no more be completion of service. It will be all those milestones that are there over it. So completion of a milestone would be considered at par with completion of service. So that makes the works contract little different. The timing of it is also becoming more important. Let's for a moment consider this from the perspective of there is going to be a EPC contract where a company signs up a rate contract for construction, or a company executes a bridge, road, tunnel, terminal work for and on behalf of PWD. There are EPC contractors. These EPC contractors place there are PMC consultant. These PMC consultants play a very important role, because the day in which the PMC consultant clears the execution of the project, says the day in which it gets completed, that day would be alone considered as the time of supply in association with it. Because many times the way in which the agreements are drafted, the timeline that are specified, whose acceptance, whose engineering clearance is required, or whose measurements confirmations is required for me to raise a invoice will be important in connection with determining time of supply, more preferably on all those contracts where there is a small timing gap between the deduction of TDS by the government entity and the offering of revenue, offering of the said value of service by the contractors to the GST department. In case there are differences, those differences need to be precisely identified. Quickly touching up on the time of supply in connection with reverse charge mechanism, the day in which they pay, that would be the time of supply in case of all those reverse charge mechanism associated with works contract, or within 60 days from the date of invoice, that would be the time of supply in connection with it. Stepping on to a next part of the works contract area, which is valuation. I'm sure all of us will agree that transaction value is the value of a supply. However, this particular transaction value would be accepted without any questions, provided two simple conditions are satisfied. Many times, these two simple conditions are the tricky conditions. One, the supplier and recipient should not be related. Two, price should be the sole consideration of the said supply. Coming back over here, if a works contract is being between unrelated person, then the said value which is quoted would be accepted as transaction value. Though it looks little easy for the purposes of compliance, for a minute think, it is a company which is engaged in the construction of high-rise buildings, where actually the company is into construction services. To put it little differently, the company is involved in construction of a REP, real estate project, but for some strategic reasons, the company has a SPV unit, a special purpose vehicle unit. This special purpose vehicle would take care of the complete in and out construction of this entire project. Very interesting to note, the said company B Limited is a wholly owned subsidiary of A Limited, who is in fact clicked off the project. Nothing to mention it over here. A Limited, B Limited, if both of them are going to be related, then naturally the value of supply is questioned, followed by. It is not only wholly owned subsidiaries, if they are directly related, indirectly related. So relationship, if there is going to be some sort of a relationship, because many times we have come across in works contract that the supplier and recipients are related. In those circumstances, important tests that need to be done, we have a detailed rule which will come out and say fair market value need to be availed. All are there. But something very important need to be determined here is, as long as the contract is on arm's length price, there are no much questions that are associated over here. Parking all those discussions in connection with related parties, because often that is an area of concern across world, where there are many guidelines that are being laid. But to my mind, in spite of all the guidelines that are there, still we will be having some of the challenging times. As long as it is cost plus reasonable profits that are always marked as part of the contract, or I could able to easily identify to a third party also, I have charged say 3,500 rupees per square feet for construction of a building, and even for my related party also I have charged the same number, then my prices are going to be same. Or for that matter, any other valuation rules that I can lay my hands and ensure the value, the relationship has not influenced the price. But something more important over here is, some of the works contract are designed that few items will be supplied by the supplier. A few items will be supplied to the supplier by the recipient, and few items will be sourced by the contractor himself. At the time of inception of the contract itself, it would be done. Now, these are all some of the areas where the respective organizations has to be little more conscious. To stepping it out as an example, a contract for laying pipe and making a culvert on it is being awarded by the local authority to a respective contractor who is engaged in a works contract service. One of the conditions of the contract is the pipe that is going to be laid will be supplied by the local authority by themselves. In fact, local authority has sourced it from a third party vendor, and local authority has ensured it is being made available at a particular location, and the said pipelines was given or handed over to the contractor before even the contractor commencing the work. Now, the contract itself is very clear that the said pipes will be given by the respective authority. We have many examples similar to that. Now, points to be noted, what will be the value of supply? When the scope of work that is granted to the works contractor to execute the work itself is simple laying of that pipe, making a culvert and closing it over there with that, then his scope does not discuss about sourcing of pipe, cost associated with sourcing of pipe. At no stretch of imagination, the cost of pipe can be added over here. We are coming across some of the during assessment, some of the officer raising issues that the cost of pipe that is being given by the contractor to the given to the contractor by the local authority shall form part of the value. Here we want to emphasize one of the old decisions of the Cesta tribunal under the pre-GST regime by name called as Bayana Builders will play a very important role, that what is my scope of supply is going to create something very important aspects in this connection. Similarly, at times contracts are structured in a little more better way that certain items will be sourced by the recipient and supplied to the contractor, and the scope of contract itself will exclude these items. In that circumstances, this adding up artificially the value will not form part of it. But though all said and done, we have a precise understanding on this, where 15(2)(c), which simply says, apart from incidental expenses will be added any money charged by the supplier for anything done. So if the supplier is going to charge additionally, as a works contractor, he is going to charge additionally for something, then yes, it would form part of it. Otherwise, it would not form part of the value. Yet another challenge that would be undergone by some of the works contractors are certain reimbursement of expenses. Nevertheless, the how much ever it is discussed, always it is a conscious approach the respective organization should take when it comes to reimbursements, because one of the in valuation, one of the topic which had a lot of debate, lot of deliberations, and it has been discussed at various levels, including we have the apex court setting principles, the Delhi High Court setting principles in case of whether reimbursement will form part of the value or not, based on various decisions, including one of the very famous decision in the matters of Intercontinental Technocrat Solutions Limited, where whether reimbursements will form part of my value of supply. As long as it is going to be a pure agent reimbursement, it will not form part of the value of supply. Let me repeat. Every conditions of the pure agent rule need to be satisfied. More precisely, it has to be an exact reimbursement. It has to be sourced from a third person. The supplier should authorize the recipient, or the recipient should authorize the contractor, and the contractor should sources from a third party. Exact same money is being recovered. In fact, invoice should be in the name of the recipient. It is a pass-through transaction for the works contractor. If all these conditions are satisfied, I do agree with you. There is a high scope in connection with excluding reimbursement as per Rule 33. Else, excluding reimbursements would be definitely a difficult task associated through it. Quickly getting back towards post uh, reimbursements, in case of any discounts that are being given, then yes, those discounts would be excluded from the value of supply. But again, as part of various negotiations. Many times during before signing of contract, the prices are getting reduced and a final number will be arrived in terms of works contract. Usually post supply, there will not be much of discount. In case after raising of invoices, for some reason, if the organization raises a post supply discount on account of change in value or change in specification, adequate documentation for it becomes more important. I would like to supply emphasize to only one area where it will be little different as compared to the other credit notes that are issued under section 34. When there is going to be a return of material, change in rate of supply, change in rate of tax or value, I would be issuing a credit note. That credit note and the credit note issued for discount on post supply will have a little bit of differences. What are the core differences over here? I have agreed for a price and I have supplied my services. However, on account of change in spec or on account of after me raising the invoices on account of deficiency in my services, if they are going to say we would be reducing the value, then those credit notes would be covered by section 34. No, no, no. It is a post supply discount that we have agreed for. If that is going to be the situation, then yes, they should ensure the credit note is issued. Further, the reversal for the said ITC is also being done in case if the recipient is going to be a registered person, because many cases, more precisely in case of installation, erection, commissioning of few plants or some of the columns associated with factory or laying of certain pipelines within the factory, in those circumstances, the respective recipient would be enjoying the benefits associated with claim of ITC, of input tax credit. Those aspects need to be taken care in a little more detailed way. Does works contract services are liable for reverse charge? They are also like any other organization. I'm not stepping into the specific aspects of it, but like any other organization, the major reverse charge in connection with transportation related services, or it is going to be any services that are received from government or director remuneration related services, or it is going to be security services or renting of taking of a residential property for a commercial purpose, or it is going to be sourcing of certain motor vehicles from other than corporate. These are some of the common services which usually happen for these works contractors. They have to ensure that they comply with all these reverse charge in a little more better way. Getting into the documentation and maintenance of contract. In fact, like every other organization, works contractor also should issue 12 different documents. There are no difference when it comes to works contractor. In fact, works contractor is being given certain extra conditions in maintaining certain documentation. Of that, the 12 regular documents such as invoice, tax invoices that are going to be issued at the time of raising RA bills. Many are times organization try to inculcate their RA, convert their RA bill into a tax invoice. Our recommendation, let RA bill be in the format which is being suggested by the recipient, because as we interact many organization as they go by the model, the modality, some wanted up to earlier RA bill is how much, this RA bill is how much, now total cumulative how much. They also have a budget. Now what is the differences? They want everything in single page report. The organize, as we interact with organization to organization, the respective recipient decides in what format the bill has to be built, because sometimes these these contracts run for few crores, and maintaining a detailed documentation in that mode becomes mandatory. Nevertheless, how am I going to maintain for the purposes of GST? Let all those variable be a relied upon document for raising of this particular tax invoice. So majority of the organization misses out only on that part. They want the variable which is there need to be understood by everybody. I am sorry, variable which has been there will be understood only by contractors and the respective operational team, or somebody who is involved in those contract, or somebody who knows this contract. Not we can't expect the jurisdiction officer, an officer who reviews this as part of the audit should come. And again, in case in some of these are able, there is a habit, less materials used will be there. For the material that are consumed, or for the electricity that is being consumed, or for the water that is being consumed, which is part and parcel of the contract, which we have in fact originally agreed upon, will get reduced as part of it. All this creates certain other challenges in terms of whether this need to be added as part of valuation or not is being created. To cut the long story short, organization has to issue independent invoices for the respective RA bills. Let the RA bill be there. It can be a source document which can be relied upon for the determination of value of service. That would be considered as the value of service, and an independent e-invoice, or as the case may be. I presume every organization generally will be more than 5 crores. In case if they're going to be less than that, the regular tax invoices will be issued. Further, occasionally, on account of change in rate of tax, there are possibilities. I still remember we have a rate discussion which will be subsequently taken up, where I have originally agreed for a different value, whereas my rate of tax is changed subsequently. Now I am left with no other option except to collect the entire value associated with it. Now I can collect all this only through a debit note model. And this debit note, more precisely, the time of supply for this debit note is going to be a larger debit associated through it, where the original tax invoice date would be considered as the time of supply for all those debit note, the rate changing debit note that are much subsequently issued by the organization, and resulting into interest liability apart from the differential taxes that they are going to pay. So tax invoices, debit note, rarely credit note are the major documents. Apart from this, every organization who is involved in works contract definitely would be receiving advances. They would be issuing a receipt voucher, very popularly called as advance receipt voucher, and adjustment voucher when that advances is being adjusted against a bill. A clean documentation of advance receipt voucher and adjustment, and reporting of them in table 11A and 11B of GSTR1 on periodical basis would be of great help to the respective organization. More precisely, the combined effect of it, which is also being considered as part of annual statement, would be of great help to the organization. Stepping into, are there any precise records that need to be maintained by works contractor? Rule 56 prescribe a precise record which need to be maintained by the works contractor, where Rule 56 presses project-wise records need to be maintained. Starting thereby, the name and address of the works contract, on whose behalf the works contract is getting executed, what is the value of supply, followed by what are the goods or services that are received and utilized in connection with works contract, what are the details of payment received by the respective works contractor, And these are some of the precise documentary requirement. In fact, many a times the organizations are failing to have a project specific consumption of materials. In other words, it is their practice. They would be sourcing 100 bags of cement. 50 bags of cement would go to project works contract 1 or project 1. Another 25 bags or 20 bags will go to project 2. Another 30 bags will come to project 3. Now, a detailed accounting of this alone would help in connection with claiming the organization, claiming ITC by the organization. I have no two views when it comes to the entire service which has been provided by the respective organization is leviable to tax. Now, as on date, almost majority of the works contract services are brought into tax net and leviable to GST. Now, there used to be days where a few services provided by them would get exempted and a few of works contract services are taxable. In those circumstances, only these detailed recording would help the organization, like how a project specific account is required for construction services. Similarly, a project works contract project specific consumption of material and consumption of services becomes mandatory when it comes to claiming of the respective ITC by them. So, on nutshell, these are all on the first leg of more procedural and compliance related aspects in connection with works contract activities. So, these are all the first set of presentation associated with it, more in connection with rate, exemptions, place of supply, input tax credit. I'll hand over it to my co-speaker, Aishwarya Agarwal, for his continued deliberation. Thank you all for effective and patient listening. Thank you.
Thank you, sir. Sir, now you can take charge.
Yeah, I can take up, Ambriji. Yes, thank you so much, Ganeshji, for your wonderful deliberation. You have set the momentum so well. Even I was enjoying listening to you. I hope to keep up the standard of knowledge as per your deliberation. Very good evening to our chairman, CA Sushil Kumar Goyalji, and our vice chairman of Indirect Tax Committee, Rajinder sir, and all the wonderful participants here. As just a minute, I'll share my PPT also. Yes, as already explained by Ganesh sir, that works contract, what was it pre-GST regime and what is it now? Like Ganesh sir has already covered various issues like time of supply, that the main thing, that is introduction to the works contract. Ki works contract kya hota hai, what is it defined, how is it defined under the GST law, the time of supply, that valuation, books of accounts to be maintained, reverse charge, and various other important aspects related to it. There is the main difference under it lies is the before GST regime, in the pre-GST regime, as the works contract which was defined over there, there was no such condition of movable or immobile property as already mentioned by Ganesh. वहां जो definition हुआ करता था, it was related to construction, fabrication, repair, maintenance and all, which can be related to a movable property or an immovable property. And over the period, ये works contract service, as already mentioned by Rajinder sir also, ये works contract को लेके बहुत सारे disputes थे under pre-GST regime, that is under the service tax and the VAT era. उस समय कई सारे confusions थे whether this is a sale or this is a service, and whether it is if you are giving us immovable property, so whether that would be a sale of goods, or या तो फिर वो immovable property है तो can tax be levied on that. There were lots of judgment on this, and this was the main service which suffered the challenge of double taxation and loss of SENVAT credit. फॉर एग्जाम्पल, एक वर्क्स कॉन्ट्रैक्ट सर्विस जब हम प्रोवाइड करते हैं तो उसमें मटेरियल एंड लेबर दोनों चीज सप्लाई होता है. अंडर द सर्विस टैक्स लॉ जो वैल्यूएशन प्रोविजन था वो बोलता है कि अंडर इफ देयर इज एन ओरिजिनल वर्क, फॉर एग्जांपल इफ यू आर कंस्ट्रक्टिंग अ बिल्डिंग, इन दैट केस इट इज एज्यूम कि उसमें जो सर्विस पोर्शन है दैट इज 40% एंड द मटेरियल पोर्शन इज 60%. सो आप 40% के ऊपर सर्विस टैक्स दीजिए. एंड एट द सेम टाइम द वैट लॉ विच वाज डिफरेंट स्टेट वाइज, the VAT law said कि original work के केस में it is assumed that 70% is supply of material and 30% is the labor portion. तो आप 70% के ऊपर VAT दीजिए. तो इस केस में आप यहाँ पर as per VAT law 70% पे आप VAT दे रहे हैं and 40% पे आप सर्विस टैक्स दे रहे हैं, टोटलिंग टू 110%. रियली सरप्राइजिंग. एंड एट द सेम टाइम जब आप 40% वैल्यू पे आप सर्विस टैक्स चार्ज कर रहे हैं तो जो आप मटेरियल परचेज कर रहे हैं फॉर प्रोवाइडिंग दैट सर्विस, उस मटेरियल पे आप एक्साइज ड्यूटी देके लाते हैं ऑन द सीमेंट, स्टील और वेरियस अदर आइटम्स परचेज. बट अब उस एक्साइज ड्यूटी का इनपुट टैक्स उस समय सेनवैट क्रेडिट नहीं मिलता था बिकॉज दैट वाज लिमिटेड टू द इनपुट सर्विसेज और कैपिटल गुड्स. तो वहां पर सेनवैट क्रेडिट का लॉस भी था. इस तरह के कई चैलेंजेस थे जिसके कारण यहाँ पर बहुत सारे टैक्स लॉसेस थे. प्लस देयर वर आल्सो कंफ्यूजन कि व्हिच काइंड ऑफ सर्विसेज आर वर्क्स कॉन्ट्रैक्ट. फॉर एग्जांपल, प्रिंटिंग ऑफ पेपर्स. अगर आप कोई भी पेपर का फोटो कॉपी करवाते हैं तो फोटो कॉपी के केस में आपको वहां पर वो सर्विस ऑफ जेरोक्स का सर्विस भी मिल रहा है प्लस साथ में आपको पेपर भी मिलता है. तो वेदर इट इज अ वर्क्स कॉन्ट्रैक्ट. एडवर्टीजमेंट सर्विस, आपके जो बैनर्स प्रिंटिंग होते हैं, आपके बैनर्स आप उनसे एडवर्टीजमेंट सर्विस ले रहे हैं या प्रिंटिंग सर्विस ले रहे हैं या आप उनसे वो बैनर खरीद रहे हैं. एक बहुत ही अच्छा जजमेंट था इन द केस ऑफ इंटरनेशनल हॉस्पिटल बाय द उत्तर प्रदेश हाई कोर्ट, इन वेयर द डिपार्टमेंट सेड कि द केस ऑफ एन एंजियोप्लास्टी, मतलब जब हार्ट में एक ब्लॉकेज होता है तो उस ब्लॉकेज को क्लियर करने के लिए एक प्रोसीजर होता है विच इज कॉल्ड एंजियोप्लास्टी, जिसमें एक इम्प्लांट लगाया जाता है, स्टेंट. एंड क्योंकि वो एक स्टेंट एक गुड्स सप्लाई किया जा रहा है तो इट वाज टर्म्ड कि क्या ये वर्क्स कॉन्ट्रैक्ट होगा. तो इस तरह के कई सारे कंफ्यूजन है. एंड ये सारे जो कंफ्यूजन्स थे फिर इसके लेके कई सारे जजमेंट्स आए. फॉर जैसे गणेश जी ने कहा, द फेमस जजमेंट दैट इज द केस ऑफ गैनन डंकरले एंड कंपनी, देन एसोसिएटेड सीमेंट्स, एंड इन 2015 दैट वाज इन द केस ऑफ L&T ऑफ कर्नाटका हाई कोर्ट, जिसमें ये सारे चीजों को टाइम एंड अगेन ये चीजें लॉ इवॉल्व होते गई. एंड इवॉल्व होते होते ये सारे चीजें ये सेटल डाउन हुआ कि इन द केस ऑफ अ वर्क्स कॉन्ट्रैक्ट द गुड्स आर सप्लाइड विथ एसर्शन एंड एक्रीशन. कि मतलब अगर एक्रीशन है दैट इज कि अगर आपका कोई भी मूवेबल प्रॉपर्टी है, मूवेबल में अगर आप कुछ भी चीज ऐड करें तो दैट इज एक्रीशन. एंड एसर्शन मींस अगर आप कोई भी
सूर्य
इमूवेबल.
जी,
यस भैया.
हाँ सॉरी आपको बीच में इंटरप्ट कर रहा हूँ. हमारे कुछ व्यूअर हैं जो हिंदी नहीं समझ पा रहे हैं, तो
Okay.
उनको हिंदी आती नहीं है, तो इसलिए
That's fine भैया,
आप
then I'll
हिंदी
keep
थोड़ा
it in
कम यूज
English.
करें. यस यस यस, दैट
Not
विल
a
बी
problem.
मच बेटर.
Not a problem.
हाँ हाँ, थैंक यू.
So,
सॉरी
thank you,
फॉर
thank you.
इंटरप्शन.
Not at all, yeah. So there were judgments like in the case of a works contract, the person has to, the chattel has to be sold as chattel. For example, if I'm buying a flat, I need to buy a flat. I don't want those bricks or cements or the steel into it. I want to buy a flat. So whether that is a works contract service or not. After all those litigations, when in 2017 the GST law came in, the works contract service was defined in clause 119 as already mentioned by Ganeshi. And over there, lots of this confusion was had been put to rest. For example, in this definition, the definition is limited to immovable property. That is, the works contract service includes any service of construction, fabrication, and etc. provided for an immovable property. If it is an immovable property, that is a works contract. And if it is not an immovable property, it is not a works contract. In that case, you can term it as a composite supply, which is defined as another thing, which has another valuation and other provision for the rate of tax applicable. So if there is an immovable property, in that case, only the works contract can be made applicable. So like whether the confusions, for example, I mentioned in the case of photo printing or advertisement or an angioplasty, those are all the situations of a movable supply of a movable goods or any movable service. So in that case, this works contract will not be made applicable. So going on, this dispute related to movable and immovable came to rest, and if there is any service of construction related to an immovable property, that is called works contract. Now, what is the rate of tax? What will be the rate of tax of this service? When the GST law came in, it had lots of lot of different types of rate. For example, if you can recall that when the GST law came, the real estate service had a rate of 12%. That is the rate of tax applicable on sale of flat or a sale of commercial property was actually 18%. And after putting the abatement in respect of the value of land, it was effectively 12%. So the rate of tax in that case was 12% for real estate, and any kind of works contract services provided came at the rate of 18%. And in case of various services, for example, for government constructions or a single house residential dwelling or any service for which the rate of tax, for example, a low cost housing. In the case of a low cost houses where the site carpet area is up to less than 60 square meter, in that case, when the tax rate applicable was 12%, so the works contract service provided for the providing that service of construction of that low cost housing was also 12%. So in that case, when the GST law was introduced, the rate of tax came in for the works contract was spread into two parts, that is 18% and 12%. 12% was for the government construction, single residential dwelling, low cost housings, and these all services which were under 12%, the rate was changed to 18% with effect from 18th of July 2022. Yes, all these services, the major areas of government construction, may be it related to construction of road, bridge, tunnel, railways, any kind of government constructions, these which were introduced at the rate of 12% with the introduction of GST law, the rate was changed to 18% with effect from 18th of July 2022. And as we all know, these works contract services are provided over a stretch of period. That will be definitely more than 3 months. So it is a continuous supply of service. And if there is a continuous supply of service, so if there is a change of rate of tax in the middle of a contract, then it is important to see whether the rate of tax charged on the invoices raised after the change of rate whether you have followed the proper mechanism for the change of rate. For example, section 14 of the GST law defines if there is a change of rate of tax, and if a service has been provided, if a service has been supplied before the change of rate of tax, but the invoice in that respect and the payment is received after the change of rate, in that case, the rate of tax applicable on that service will be the rate after change, that is the higher rate, 18%. So if you like when you the last day when you had prepared annual return of many of your clients, then GST 9 and 9C, in that case, if you have dealt with any of your client who has provided works contract service for a government construction or any single house residential dwelling, wherein the rate of tax was applicable earlier at rate of 12%, and there has been a change of rate from 18th of July 2022. So whether you have checked the applicability of that new rate in the service provided. In case there was the requirement for charging of GST at the higher rate for any service provided before the date of change of rate, whether the client has charged that new rate or not. If you have missed it, please re-verify it, because that may be subject to scrutiny by the department later on whenever there is a department audit or any scrutiny. And there is a service where the 12% rate still remains, that is a contract which includes earthwork of having percentage of more than 75% of the total value of the contract. For example, if there is a contract for land development or filling of a big pit in the land, if there is such kind of contract where more than 75% of the value of this contract includes the value of the earthwork, in that case also the tax rate applicable will be 12%. Otherwise, it will attract 18%. And in this case, if this contract has been subcontracted to another subcontractor who will provide this contract to a main contractor, in that case also the rate of tax applicable will be 12% for that works contract service. And in any other contracts, be it after 18th of July 2022, any other works contract provided shall attract the rate of tax of 18%. That is, Right now, if you're providing any kind of government construction service or a low cost housing construction or any type of works contract service, the rate of tax applicable is 18%. And there is no restriction for input tax credit. Any kind of input tax credit against this contract can be claimed and utilized. So the things have become actually more and more simple, more or less simple now, because another challenge, the main reason which I believe for increasing the rate of tax is that in a case where for example, a contractor who is providing a service of government construction, for example, the contract is of say 10 crore rupees, where the GST, if the GST applicable is to be paid at the rate of 12%, that is 1.2 crores. But the cost incurred for providing that service includes purchase of steel, cement, labor services, and various other kinds of services, where the most of the type of supplies has the rate of 12%, and the cement, which is the major part of the raw material, has the rate of 28%, which led to accumulation of input tax credit, because the output tax is to be paid at the rate of 12%. So due to this challenge, there were various representations, and I believe that because of that thing, the rate of tax has been increased to 18%, so that the challenge of accumulation of input tax credit can be addressed. Now moving on to the exemptions. Are there any kinds of exemptions? As we know that if you're talking about any kind of service, we look forward towards the exemption if there is any relief provided to this sector. As in the service tax regime, there was lots of exemption to this kind of works contract or construction service. For example, any kind of government construction, government buildings, road, bridge, tunnels, railways, ports, airports, and the government buildings related to education, healthcare. There were lots of exemptions over there in the pre-GST regime. But after this introduction of GST law, all those exemptions have been withdrawn. And right now, there is no such exemption related to works contract. But if there is any service pertaining to construction of this beneficiary-led individual house construction under this Pradhan Mantri Awas Yojana, or pertaining to single construction of a single residential unit, in that case, if the contract is for supply of pure labor only, it means that if the principal procures the goods on his own and the contract is given only for the supply of labor, in this two situation only, the labor contract shall be exempted. But if the contract is a works contract, that is supply of both labor and material, in that case, there is no such exemption, and the applicable GST will be 18%. So right now, if you talk specifically about the works contract, there is no such exemption under the GST law. Now the most important part, that is the place of supply. Actually, it becomes more important in the case of an works contract, because it is related to a service related to an immovable property. What is place of supply, and what is its relevance under the GST law? As we all know that when there is a supply of goods or a service, there is a supplier and there is a recipient. Supplier goods and he pays the consideration. So what is the meaning, what is the sense of this place of supply? This GST law has been introduced with the concept of consumption-based tax. That is, the tax will flow to the state or the territory where this goods or service is actually consumed. So it is important to determine where the goods or service which is supplied, where is this ultimately being consumed. The state, if it is being consumed within India, that is, if it is being consumed within the same state of the supplier, then it will attract a local tax, that is CGST and SGST. If it is being consumed in any other state or a union territory, then it becomes an interstate levy. Then in that case, the tax applicable will be IGST, and the applicable tax will flow to that state or the union territory where the service is ultimately being consumed. And if this service is being supplied outside India, that is a non-taxable territory, then that becomes a zero-rated supply, and it will be termed as export, and the applicable GST is, there is no liability for payment of GST. So the place of supply is a very important concept which needs to be checked in the case of every contract which is being received by your client. How does it has an impact? We will see it forward. So this interstate supply has been defined under section 7 subsection 3 of this IGST Act, which says that subject to the provision of section 12, the supply of service where the location of the supplier and the place of supply are in two different states or different union territories, or a state and a union territory, shall be treated as supply of services in the course of interstate trade or commerce. So if you can see in this provision, there is no reference to a recipient of service. There is a supplier and there is a place of supply. The supplier has a location, and the service or the goods, whichever the place where the service is being consumed, that becomes the place of supply, and that will decide whether this supply is a interstate supply or an intrastate supply. So if the location of the supplier and the place of supply are in different states, or in different union territory, or in one in a state and one in another union territory, that becomes a supply in the course of interstate trade and commerce. And in that case, the applicable tax will be IGST, with the selection of the place of supply of particular state or union territory where the service is being consumed. And what is an intrastate supply, which has been defined under section 8 subsection 2, which says subject to the provisions of section 12, supply of services where the location of the supplier and the place of supply of services are in the same state or same union territory shall be treated as intrastate supply. Again, there is no reference to the recipient. There are only two persons involved. That there are two things involved. That is, one is the supplier and another is the place of supply. If both the things are in the same state or the same union territory, that becomes an intrastate supply, and the applicable tax will be CGST and SGST. This definition becomes very important in the case of works contract service, because as we know that there are contractors who are providing services across India, and there are various contractors that are providing services outside India also. But the recipient may be in your same state or the state other than the state where this service is being provided. So that will have an impact on the tax which you are charging, and also have an impact on the flow of input tax credit for the recipient. That is a very important thing which we find that it is being neglected in many cases. So it is a very important thing which we will be taking forward. Provided that the intrastate supply of services shall not include supply of services to or by SEZ developer or an SEZ unit. Of course, that becomes an export. Now, as we have seen, what is an intrastate supply and what is an intrastate supply? So how do we decide now where is this place of supply? Because we know if we are a supplier, we know where is the supplier. That is our own establishment, the place of our establishment, the place of business. But now we need to decide where is this place of supply. So to decide the place of supply, we need to refer to the recipient, the location of the recipient. If the both supplier and recipient, the location of both supplier and the recipient is in India, this situation has been covered under section 12 subsection 2. For a normal service, the place of supply of service except the services specified under subsection 3 to 14 made to a registered person shall be the location of such person. Means if the service is supplied to a registered recipient, the place of supply shall be location of such recipient. Made to a person other than registered person shall be location of the recipient where the address on his record, and the location of the supplier of service in other cases. So if you have a location, if you are having the address of the recipient on record, then the address of the recipient will be the location of place of supply. And if you do not have any address, then the location of the supplier will be, it means that it will be deemed that the supplier has been, the service has been supplied at that place only, that is at the place of the supplier. And that will decide the place of supply of that service. But is it same in the case of a supply of service related to an immovable property? That is in the case of works contract, as in this situation. This situation has been covered under section 12 subsection 3, where it says the place of supply of services directly in relation to an immovable property, including services provided by architects, interior decorators, surveyors, engineers, and other related experts or estate agents. Any service provided by way of grant of right to use immovable property or for carrying out or coordination of construction work Clause D, any services ancillary to the services provided in Clause A shall be the location at which the immovable property or boat or vessel, as the case may be, is located or intended to be located. Very important. You can see that there is no reference to the location of the recipient as it was in section 12 subsection 2. Because if there is a normal supply of service, in that case, location of the recipient becomes the place of supply. But in the case of a service which is directly in relation to an immovable property, in that case, the place of supply will be the location at which the immovable property is located. This is very important, and the point which should be noted and should be verified in case of every contract of your client. Provided that if the location of immovable property or boat or vessel is located or intended to be located outside India, the place of supply shall be the location of recipient. What are we talking about? If you see the heading of this slide, it says where the location of supplier and recipient both is in India, but the location of the immovable property is outside India. So you may believe that because the service is being provided outside India, this is an export and GST is not applicable. But no, as per this proviso, if both the supplier and recipient is in India and the service is provided, the works contract service is being provided outside India, even then the place of supply will be the location of the recipient, that is in India, and the GST is applicable on this service. Very important thing. We can discuss this with some illustrations, as you can see in the screen. The first situation is if the location of the supplier is in Odisha and location of the recipient is in the same state of Odisha, plus the location of immovable property is also in Odisha. So what will be the place of supply? I hope there is no chat box, so I cannot interact with you all. But in this case, the place of supply is Odisha. In every situation, you will see that the location of the immovable property is important. In this case, the recipient is also in Odisha and the property is also in Odisha. So the place of supply is Odisha and the tax applicable will be the local tax, that will be CGST and SGST. Then if the supplier and recipient are in different state, supplier in Odisha, recipient is in Jharkhand and the immovable property is in Jharkhand. In that case, the place of supply is Jharkhand and the tax applicable will be IGST. Third situation. This is a crucial situation that when the location of supplier is in Odisha, location of recipient is in Jharkhand, but the location of immovable property is in Odisha. So where is the place of supply now? As per this section 12 subsection 3, the place of supply becomes Odisha. Even if the recipient is in Jharkhand, he is in different state, but the place of supply in this case will be Odisha and the applicable tax will be CGST and SGST. And if the tax applicable is CGST and SGST and the recipient in Jharkhand wants to take input tax credit of this tax, whether he will be able to take that input tax credit, that is a big problem. And in that case, the recipient needs to plan his registration in order to claim the input tax credit. Fourth situation, the supplier is in Odisha, the recipient is in Odisha, but the location of immovable property is in Jharkhand. Now the place of supply becomes Jharkhand and the tax applicable is IGST. The supplier will charge IGST with place of supply as Jharkhand, but the recipient is in Odisha. Whether he will be able to claim that input tax credit? Again, if there are three different states where the supplier is in Odisha, recipient is in Jharkhand, and the immovable property is in West Bengal, that is a third state. So in that case also, the place of supply becomes West Bengal and the tax applicable is IGST. Now the sixth situation, which is a very critical situation, where the supplier is in Odisha, recipient is in West Bengal, but the construction service is being provided in Bangladesh, that is outside India. But both the supplier and recipient are in India. So what will be the place of supply? Whether this is an export of service? No, as we discussed in the provision of that section 12 subsection 3, that becomes a local service provided in India at the location of the recipient. Now the place of supply will become West Bengal and the tax will be chargeable on this supply. Now moving forward, another situation where either of this supplier or recipient is outside India. Earlier, there we covered to section 12, where the situation was both the supplier and recipient of the services are in India. Now the another section covers the situation where either of the supplier or the recipient are outside India. Now what will happen? Whether all the services in this case will become an export of service. Let's see. In this section 13 subsection 4 says, the place of supply of services supplied directly in relation to an immovable property, including services supplied in this regard by experts and estate agents, supply of accommodation by hotel, inn, guest house, club or campsite by whatever name called, grant of rights to use immobile property, services for carrying out or coordination of construction work, including that of architect or interior decorators, shall be the place where the immovable property is located or intended to be located. So in this case also, if either of the supplier or the recipient is outside India, the place of supply shall be the location of the immovable property located or intended to be located. So let's discuss this with again some situations. Situation number 1, where the supplier is in India and the recipient of that service is in Bangladesh, and the construction service is provided to an immovable property in Bangladesh. In that case, the place of supply is the location of immovable property. That is, the place of supply becomes Bangladesh. India, outside the taxable territory, this becomes an export of service. And if it is an export of service, there is no tax applicable. You may go with payment of tax or without payment of tax and opt for the refund, refund route, whichever you want, find it possible for you. Second situation, if the supplier of service is in Bangladesh and the location of recipient is in India, but the location of the immovable property is in Bangladesh. So the supplier is in Bangladesh, the property is in Bangladesh, the recipient is in India. So the place of supply becomes Bangladesh, and as the place of supply is in Bangladesh and supplier is also outside India, there cannot be a levy in that case. Third situation, if the supplier is in India, the recipient is in India, but the location of that immovable property is in Bangladesh, what will happen in this case? In this case, the location of this, there is a mistake in my slide. The place of supply in this case will be Bangladesh, and that will become an export of service, and there is no GST applicable in this case. There was an advance ruling in a situation, a very interesting situation, where the Maldives government gave a contract for construction of a government building in Maldives to NBCC in India. NBCC is a government organization, National Board of Construction Construction Corporation in India, which got a contract from the Maldives government for construction of an immovable property in Maldives. NBCC subcontracted this to a person in India, to a contractor in India, who was given contract for construction of this government building in Maldives. So this person, the contractor, goes to Maldives for construction of this immovable property, and for this purpose, he will raise an invoice to NBCC because the supplier of service is in India, that is the contractor, and the recipient in this case, immediate recipient for that contract is NBCC, which is also in India. But the place of supply is the immovable property located in Maldives, that becomes outside India. So this becomes an export of service. GST not applicable. Now NBCC will raise an invoice on Maldives government because now the NBCC becomes a supplier of service and the recipient becomes Maldives government, and the location of that immovable property is also in Maldives. In that case also, that becomes an export of service, so GST is not applicable. So these are the type of situations which actually happen and which we need to see in each and every situation, whether that service is provided within your state or intrastate, interstate, or outside India, and how is the input tax rate flowing in that situation. A very important concept, because in many cases of our client, we find that the client is doing mistake in this case, and right now he's not under scrutiny, so his the tax credit are flowing as per his will, and he's charging the tax as he wants, as per the location of the receivement, without going into the fact that he need to check the location of the immole property. So it is important that you check it now for every situations applicable for your client. Now that is the place of supply. As per this provision, place of supply, we could decide that what is the tax applicable, that is a local intrastate supply or an interstate supply, and whether it is flowing to our recipient or not. Now comes the input tax rate. As far as works contract service is concerned, as a works contract supplier, as we saw that the rate of tax applicable on most of the contracts now is 18%. And this 18% comes without any condition related to or without any restriction related to input tax credit. So the provisions of this input tax credit, that is section 16, which comes with the conditions for claiming of input tax credit, is applicable similarly for a works contract supplier as it is applicable for any other supplier. So all these conditions needs to be fulfilled, that he should have a proper invoice, he should have received that goods or service, the supplier should have made the payment of tax, the invoice should be reflecting in his 2B, and all the conditions applicable under section 16. But in this case, it is important that as a works contract supplier, he should make sure that as per the place of supply provision, all the input tax credit are flowing to him. Because there may be a situation that he is located, say, in the state of West Bengal, he has got a contract for construction in the state of Odisha, and for the purpose of that contract, he is buying anything, any maybe cement or steel from any local supplier of that steel and cement. And as this place of supply, as this the goods or cement or steel is being supplied over there in the site in Odisha, the supplier may have charged the local tax, that is CGST and SGST. So he needs to see whether he has rightly claimed input tax rate of that or not. You should ensure that there is no loss of input tax credit in that case. And if there is any loss, that needs to be planned properly, whether by the need of tax registration, GST registration, or by making proper invoices of those purchases so that the input tax credit flows to that works contract supplier. Now, when we talk about the eligibility of input tax credit, section 16 applies similarly to it, and also the section 17 subsection 5. What is it? The most draconian provision, that is the blocked credit. In the case of blocked credit, there are two entries related to the works contract service or a construction service which restricts this input tax credit. What are these entries? As per this provision of 17.5, notwithstanding anything contained in subsection 1 of section 16 and subsection 1 of section 17, tax credit shall not be available in respect of following, namely, clause C, works contract service when supplied for construction of an immovable property other than plant and machinery, except where it is an input service for further supply of works contract service. I read it again. The works contract service when supplied for a construction of an immovable property other than plant and machinery, except where it is an input service for further supply of works contract service. So what does it mean? That if I am a works contract service provider and for providing that service, I may have subcontracted some part of my service, or I may have subcontracted my entire service to another contractor. So I am receiving a works contract service for providing my works contract service to my principal. In that case, does my input service received get restricted under this block credit clause C of this section 17.5? No, because this service is covered under this exception which says except where there is an input service for further supply of works contract service. Means because my further supply being made is a works contract service, so for this purpose, if I am receiving any supply of works contract service, I can claim input tax credit of that. But beware, if there is a contract and that in that contract only, for say I have received a contract for construction of a building of say 10 crores, and out of that I am subcontracting some part of that for say 5 crores. So if I am receiving that service of 5 crores, the applicable tax paid on that service can be claimed as input tax credit against my outward supply of that 10 crores. But At the same time, if as a contractor, I am constructing my office, and for that construction of office, I have assigned a job to a works contractor for that construction where he will supply both labor and service, labor and goods. So if I'm receiving that works contract service and I'm a works contractor and my outward supply is also a works contract service, whether I will be able to claim input tax credit of that. If I am receiving an interior service or a construction service, whether I will be able to claim input tax credit of that under this clause, because the exception allows receiving any works contract service. Mind it will not be covered under that because this is a specific linear transaction where for providing a works contract service, if I am receiving a works contract service, in that case, I am eligible to claim input tax credit of that service only, not any other works contract service which I have received under my organization. That may be for my personal consumption or that may be for any service which is not a further supply of works contract service. Now, if I'm not a works contractor, for example, if I'm constructing a shopping mall, as you all know, there is a famous judgment in the case of Safari Retreat of Odisha High Court, where the appellant had constructed a mall, a shopping mall, where the outward supply service was renting of immoral property, and for that he has received a service of works contract, or he has also procured various goods and services on his own account. So the service to be supplied is a rental service or any other service which is not a works contract. Whether I will be able to claim input tax credit of that? So that becomes an ineligible credit in this situation, because the works contract service, if it is not related to any further supply of works contract service, that becomes an ineligible or blocked credit in this situation. I will discuss about the Safari Retreat judgment after another clause. That is clause D. What does it say? Under clause, I come again to this clause C because it said there was a restriction for works contract service. What is the works contract service? Where there is supply of both goods and service together. So I, being a smart guy, I may plan that, okay, I don't take a works contract service. I will book a contractor for supply of labor and I will procure my material separately. So I may plan this for claiming of input tax credit and to escape myself from this this ineligibility under clause C. But the government thought before me, and he has already inserted this clause D, which says the goods or services or both received by a taxable person for construction of immovable property other than plant or machinery on his own account, including when such goods or services or both are used in the course or furtherance of business. Means if I am procuring goods for construction of an immovable property on my own account, means for construction of my own building, in that case, even if that building is being used for further supply of any other service, maybe I am using it as my factory admin building or for further rental, or I may be using as my office space, even then I am not allowed to claim input tax aid because it is restricted in this clause D. Now the question arises, the judgment of Safari Retreat by Odisha High Court, where the High Court has allowed to claim input tax credit in case of construction under clause D, where the goods or services are procured for supply of a service that is rental service. Actually, in that case, the High Court has said that this provision frustrates the intention of this law, GST law. The GST law was brought for seamless flow of input tax credit, and a taxable person is allowed to claim input tax aid in respect of all the goods or services used for his further supply. But this clause D restricts, this clause C or clause D restricts that intention. So the High Court has read down this provision and said, because the shopping mall being constructed is used for rental, which is the main supply of service for the taxable person, that is a Safari Retreat, so he is eligible to claim that input tax credit. But this judgment has been challenged before the Honorable Supreme Court and matter is under sub judice over there. And as per our information, the hearing is also completed and the judgment is reserved and which we may expect anytime in near future. Let's see what does the court decide. But by going by the law, if you are receiving any kind of works contract service or a goods or services received for construction of our own building, in that case, the input tax credit is not allowed. But you will see that in both the situation, there is, which I have highlighted in yellow, which says other than plant and machinery. This plant and machinery has been defined in this provision, which will be coming forward towards that. The provision has an explanation in it. And what does it say? For the purpose of clause C and D, the expression construction includes reconstruction, renovation, addition, or alteration or repairs to the extent of capitalization to the said immovable property. Very important explanation. I read it again. For the purpose of clause C and D, the expression construction includes reconstruction, renovation, addition, or alteration or repair to the extent of capitalization to the said immovable property. Let me tell you, this explanation has ruled out the concept of accounting standard 10, that is capitalization and fixed asset. Because what does this say? That if there is any expenses related to repair, reconstruction, renovation, which you are not capitalizing, which you are actually booking it as a revenue expenditure in your profit and loss account, that will be allowed as an eligible credit. Because the ineligibility under clause C and clause D is restricted to the expenses which is capitalized in your books of account. For example, if there is a building where you are having an expansion, you are constructing some extra rooms over there. In that case, as there is an expansion of that building that needs to be capitalized, the cost needs to be capitalized in your fixed asset, then that expenses and GST paid on those expenses will not be allowed as input tax credit. But at the same time, if there is any repair job, for example, if there is any repairing of that wall or if there is any painting job being done and that expense is being booked under PL account, profit and loss account, as a revenue expenditure, that will get excluded from this ineligibility and will be allowed as an input tax credit. But as you all know, where there is an opportunity, there is always some exceptional and there are some exceptional brains over there. And by going by this explanation, there are various situations where even if there is some expansion in the factory or expansion in a building, there are some expenses which should be capitalized as per the concept of accounting standard 10. But even then, the taxpayers are booking it as a revenue expenditure to take the benefit of this provision and to claim input tax credit of that. Now moving on to the next part. That is, as I mentioned, the definition of plant and machinery. We saw in the clause C and D over there of the section 17.5, which says where there was a purchase of goods or services or a works contract service received for construction of an immovable property other than plant and machinery. Means the plant and machinery was not covered under that restriction. Now, what is this plant and machinery? Plant and machinery means apparatus, equipment, and machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services of both, and includes such foundation and structural support but excludes land, building, or any other civil structure, telecommunication towers, and pipelines laid outside the factory premises. I read it again. Plant and machinery means apparatus, equipment, and machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both, and include such foundation and structural support. So if there is a machinery being set up, for example, a basic example is a DG set. If you are installing a DG set, that needs a proper foundation before setting up that DG, because there is a lot of vibration in it. Say if you're doing foundation, that includes purchase of some bricks or cement or steel for setting that, making that foundation, and over that foundation the DG set is being installed. So even if this foundation setting of this foundation includes purchasing of these goods or services for an immovable property or receiving any works contract service, but still the input tax credit in respect of that foundation shall be allowed. Or if there is any machinery needs to be set up with any structural support, the angle, channels, rods, beams, or any type of foundation work used for that foundation and structural support, that will be also considered as plant and machinery for the purpose of this definition. And GST paid on this expenses shall be allowed as input tax credit, even if it is capitalized in your books of account. So by this clause C and clause D, there are two exceptionals. One is if there is any expenses which is not being capitalized, then you can claim as input tax credit. And second, in the case of plant and machinery, even if in the case of plant and machinery, there is a foundation or structural support for that plant and machinery, it is eligible and as an input tax credit, even if it is capitalized in your books of account. I know there must be a lot of confusion. Let's see with some illustrations over here. In this image, you can see there is a foundation being set up before putting up machinery on it, before setting up a machinery on it. And setting up this foundation needs cement, steel, and lots of goods or services or a works contract service, which will be allowed as an input tax credit as per this definition of plant and machinery. Similarly, you can see in this image also the machines, that these motors are being set up on a foundation. So even along with this purchase of this motor, the GST paid on any purchases related to this foundation will also be allowed as an input tax credit. Next, we see this machine, the crusher machine, which is set up where there is a lot of structural support for this, because the machine has to be set up at a height, and for this you need to give a foundation along with structural support, which needs lots of beams, angles, channels. Even if this expenses which were earlier restricted under excise or service tax law, that is the SENVAT credit rules, but now by the virtue of this definition of plant and machinery, this input tax credit is allowed. Now this is a situation where you can see in the second image of this slide, this is a very interesting situation where the machinery has been set up with some structural support along with a shed on that machine. Whether you can claim an input tax credit in respect of that shed, there is a flooring in that shed, there is beam, and there is a sheet, and along with all the structures for setting up of this shed. Whether this will be covered under this plant or machinery? My answer is no. You are eligible. The plant and machinery definition covers only the foundation and structural support for that machine. If you're covering that machine with a shed, that is not a structural support, even if that is a need for that machine, because that needs to be covered to protect it from a rain or sun or any kind of thing. But still, that is not allowed as input tax rate, because that does not cover under that definition of plant and machinery. And you, as there was an exception to that, where you will see this clause 1 to this definition that says but excludes land, building, or any other civil structures. So this kind of civil structure, if there is any building or any shed being set up for over that machinery, that will not be allowed to that. So this is very important. If there is any expansion project going on for your client, you can plan how to claim most of the input tax credit as per the provision of this law, because there is a preconception that if there is any construction expense related to cement, steel, then it is an ineligible credit, and at the first place they go ahead and reverse that input tax credit. So there is a lot of areas where there is an input scope of claiming eligible input tax credit in this case also. So that is all for input tax credit. Now going ahead to refunds. When we talk about refund under the GST law, there are two situations under which the refund is allowed. First, if there is a zero rated supply, means there is an export, that can be export of goods or export of service. So a works contract service, as we had a situation where the service was being supplied in Maldives or in Bangladesh, and the place of supply was also in that country outside India. So the service was being supplied outside India, and that becomes export. So it is a zero rated supply, and the applicable tax paid on that supply, be it an outward supply or an input tax credit, becomes eligible for refund. And second situation, where there is an inverted duty structure, inverted rate duty structure. In that case, you shall be eligible to claim in refund of that input tax credit, which used to happen earlier when the rate of tax was 12% for government construction. There was lot of expenses which led to input accumulation of input tax credit, and the taxpayer were eligible for claiming that refund of under inverted duty structure. But that had an inherent limitation that the inverted duty structure allowed refund only in respect of input and input services. There is no, sorry, only in respect of inputs. There is no refund allowed against the capital goods or input services. So the refund allowed was very low, which led to lots of representation. So now for an export of service, as I mentioned, that if the place of supply is Bangladesh or the Maldives, that becomes an export of service. Is it so simple? No. The export of service is also defined under section 2 subsection 6 of the IGST Act, which says export of service means the supply of any service when the supplier of service is located in India, the recipient of service is located outside India, the place of supply of service is outside India, the payment of such service has been received by the supplier of service in convertible foreign exchange or in Indian rupees wherever permitted by the RBI, and the supplier of service and the recipient service are not merely uh, establishment of a distinct person in accordance with the explanation 1 in section 8. So all these conditions needs to be fulfilled for a service to become an export of service, and if it is an export of service, in that case only you will become eligible for the refund under this act. So, and now what is a zero rated supply, which is defined under section 16? It says zero rated supply means any of the following supplies of goods or services or both, namely export of goods or services or both, or supply of goods or services or both for authorized operation to a SEZ developer or SEZ unit. Subject to provision of subsection 5 or 17 of the CGST Act, credit of input tax credit may be availed for making zero rated supply, notwithstanding that such supply may be an exempt supply. So what does it say? That if you are providing any works contract service or you are receiving any works contract service, subject to the restriction of block credit under section 17 subsection 5, you can claim a refund of this input tax credit. And the export can be done with or without payment of tax. As we know, there is a provision that if you are providing works contract service, we can provide that service. Even if it is an export of service, we can provide the service with payment of tax, where the GST will be charged, even though it will not be collected by our recipient, but the GST will be charged and it will be deposited in our return in GSTR1, where I will show it as an export with payment under table 6. And after verification of that export, the outward supply will be allowed as refund. And if there is a case of without payment of tax, that is if the supplier has applied for an LUT letter of undertaking and the export is being done without payment of tax, then the supplier is eligible to claim refund of all the taxes paid for supplying, all the taxes paid on purchases or services received for supplying that outward supply of works contract. I hope that was clear to all, and that is all I wanted to say. Thank you so much. Over to you, Impreet.
Now we can take up the questions.
Yeah, sure. So Ganesh ji is also there.
Yeah, yes.
If you stop sharing, then you can take up the questions.
A first question from, I'll take it up, Sunil Bhaiya.
Yeah, sure, Ganesh ji, please.
Mohammed,
Erection commissioning, the question coming from Sandhya Bhaskar. Erection and commissioning of powerhouse for generation of electricity, is it plant and machinery or it is immobile property for GST purpose? So, Mr. Ganesh, if you want to answer this.
erection, it is a topic of Aishwarya, so he'll answer.
Okay.
Not a problem. Okay, but
it is both of you are expert of the
yes.
entire topic, and
Yes.
personally, I want to know the views from both of you because somebody is asking.
Definitely,
So I started with you. Let the
yes,
Aishwarya
sir.
start. Aishwarya, what is your view? It is erection and commissioning of powerhouse for generation of electricity. Is it plant and machinery or it is immovable property for GST purpose? What is your views?
Definitely, setting up of a power plant for producing power is a plant and machinery which includes various parts which where the expenses needs to be done in various parts. For example, setting up of a foundation structures, and over that all the machineries, for example turbine and everything, where there is a thermal power plant or a waste heat power plant that needs to be set up. So all this will become a plant and machinery as per the definition, and the input tax credit is eligible for that. But there is another area for, because that the power being generated is an exempt supply. Whether he will be able to claim input tax credit of that becomes questionable, because if it is an independent power plant and the sale is only of power, then that is an exempt supply, so the input tax rate may not be allowed in that case.
Ganesh, Mr. Ganesh, you want to add up here something?
No, I subscribe to the view raised by Ashura.
But I want to add here something.
Yes.
Yes,
Yeah,
sir.
Mr. Ganesh, please complete. You wanted to say something.
The only challenge over this is if it has been used for captive consumption purposes, then definitely the eligibility to claim of input tax credit cannot be questioned. But many times we come across these are all attached, or this has been for a wobble-free operation. It has been attached to earth for the purpose of ensuring a better stability purposes. It is nowhere creating a immovable property associated aspects. So to that extent, yes, it is still eligible for credit. And if it has been the electricity generated is captively consumed, definitely it can be enjoyed by the organization.
I think this particular question was in the direction. Suppose a power plant has been constructed. So there must be a building. There must be a building in the power plant,
Yes.
and there is some equipments have been. So what part of this particular building will be considered as power plant, as a plant and machinery, and what will be considered as a immovable property? And that is the superstructure. So suppose you are creating a shed, you are installing a particular machine, it is applicable for all type of plant and machineries. If you have for machines which are considered as a plant and machinery, you may require a structure to cover it. But if it is not required, any structure is to create it just to run a rail on that, or you might be a crane is fixed on that. These can be considered as a plant and machinery. But a shed or a building which is covering the plant to protect the plant will not be allowed as a credit. So I hope this guideline will help you in finding out what is the plant and what is the building
Definitely,
or the
sir.
superstructure.
The contract needs to be breaked actually into parts. What are the types of
Yeah, that must be looked into. That was the intention of the questions. I thought so. I should just uh, jumped in. Next question, sorry, I want to ask you, sir. Can you also dwell on the registration requirement for works contract? That is, whether a registration is to be taken wherever the work being carried out, if the work is in the same state as an additional place of business, if it is in another state, take the registration, need to take the registration in the other state. That is the query. How you want to answer?
actually there are two views in that. One is what the law says, and one what is the practical problem in that. For example, in first situation, if the contract is being provided, works contract is being done at a premises which is in the same state, in that case, I don't think there is a need of any registration, because whatever goods or services is being procured is being received in that state only. I may add it as an additional place because I am having stock of my cement, steel, or whatever raw material used for that supply of that service. So if there is any investigation later on, so I am having a stock over there, so I should add it as my additional place of business. And if it is being provided in any other state, in that case, we must take a registration of that, because that will allow us give us the comfort of claiming seamless input tax credit of all the purchases made in that state, because we will be receiving some services also, we'll be buying goods or many works contract services also in that state, but the input tax credit becomes restricted in many situations So by taking registration, that flow of credit will help us a lot. So it is advisable to take registration for that. If there
Thank
is
you,
anything,
Ashwin.
Ganesh, you would like to add?
Yeah, it's very pertinent issue you have raised. That is the if it is in any other state, if locally procured material, they will raise invoice locally procured services also, considering the place of supply and the place of the supplier. Both are in the same state. In other state where you are not having registration, they will charge CGST, SGST, which credit will not be available to you. I think Mr. Ganesh, by nodding the head, agreeing with me. Anything from you, Mr. Ganesh?
I completely agree with you. I only want to put up a little different situation. If something to do with civil activity alone is going to be there in the other station, but because today some of the works contract almost I am strategizing many things located in a centralized location where locating at say in Bombay, I've been instructing many people to go and execute, instructing my supplier to manufacture and deliver at the location. Sometimes the contract also is so precise. The moment material comes to my location, I take the ownership of the material, though it is contractually obligating in that way. So keeping all that in mind, if I'm going to do something of civil nature, touch the ground, dig the ground to do something, then naturally I'm of a view the next state registration becomes automatically mandatory. No bill to ship to will help. Nothing would help in connection with all these aspects associated with it.
You are mute, Sushilbhya.
Next question, a contractor is supplying material as well as services, only then it will become a work contract. Within the state, can he take the input tax credit on purchase of material and services? Aishwarya, you want to answer? Whether the contractor will get the credit of the material purchase and services, and he is doing the work within the state.
Yes, definitely he will get. Assuming that he has a registration over there, he will get the input tax credit.
Yeah, very, very, very important issue in GST. It was not the earlier law. GST
Yes.
says if you are unregistered, no credit. Credit is the first and foremost condition. You must have the registration. So very rightly said, Aishwarya. Ganeshji, you want to say something?
Nothing, Your Honor. Nothing. Agreeing to us views.
This question is differently drafted and number of persons asking this. In case of construction of auditorium with furniture, which is the work contract GST applicable 12% or 18%? I thought he was asking about the furniture which credit is available or not. Anybody have this? Usually, let me ask both the speakers. Usually, we avoid answering about the rates because to answer about the rates, we need to find out the contract, what exactly the work has been carried out. Simply, if we say 12 or 18, it may bring the trouble for the viewers. So we avoid better. Mr. Ganesh, you agree to this? A rate should not be answered in one line. It's
I
first we have to
completely agree to
understand
you. Because I now need to know who's the supplier, who's the recipient, what is the product under construction. Is he recipient? Is he a government authority or government entity or local authority? And is he satisfying all this condition? It can go on, as you very rightly said, it's a never-ending task in determination to rate of tax. It is leviable to tax. You are entitled for ITC. Rate individually need to be decided based on the discussions.
This is the question whether interior work done in a building is part of immovable property, as it is not capitalized under the building and only under the interior work, furnitures. They have capitalized the interior work under the furniture, whether it will be part of the building or not. This is the query. Over to you, Ganeshji.
I take a very precise modality that in the top false ceiling, in the ground, the wooden panels or plates or tiles that are touched. This two eligibility to ITC will have its own challenges associated with it. Barring this two, rest all can be availed. But to put it in a little different way, today's interior works are all is so well planned that even if I change premises, I can move these item and put it over into my new offices. So it can be the regular cubicles or the conference hall or the seaters, facilities that are there. So considering those aspects, or even a server room elevation that is being required from the floor. So all this, as it is just movable in nature, it takes away the characteristics of immovability. So definitely would be entitled for ITC. Only thing is, something which is very attached to the wall is a word of caution on its claim of ITC.
Surya, you want to add something?
No, I definitely agree with Ganeshji that if you're having an interior for office, so as he mentioned that nowadays all the ready-made furnitures are there which are to be set up on as is where is basis. So we can that can be considered as movable also. But if there is any interior decoration which involves, for example, cutting of pliers, fixing it to the walls, and if it needs to be dismantled, that needs to be broken, then only it can be taken out. Or if there is anything related to wall paneling or the flooring, ceiling, as mentioned by him, that all will be considered as immobile property. But other than that, like the chairs, tables, which are all movable, that can be considered as movable and not under that works contract service. And input tax rate can be claimed. So that needs to be segregated, which are the ready-made purchases and which are all the things which needs to be cut and put as per the customization which it needs.
Thank you, both the panelists, both the speaker, and my friend. The question let me add here. He wanted to know if I capitalize with building, what will happen if I capitalize it separately. If you are capitalizing with building, no credit will come to you. Very difficult to prove that it is movable one or something. So if you really looking for credit, you must look for credit of movable properties only. Immovable credit, even it is capitalized separately, it will not be allowed. And if it is movable, you can take it. So thank you both the participants, Ganeshji and Aspharia, for taking the topic in detail. This particular webinars, we try to start at time, that is 5 o'clock, and we also try to close at time. So it is already crossed 2 minutes. So thank you, viewers, for joining us. We will try to answer these queries. We will send this, both the queries are available with the panelists. If they wish to write, they can write you directly, or our committee will definitely try to answer these queries. If not so technical, definitely it will be answered through email, because we have captured the email address of each and every participant. So we will try to do it. Number of participants have written about the PPT. This PPT definitely will be provided. Those who have asked for, or if office can send it to everybody, we will definitely do. So requesting both the panelists to share the PPT, so we can share with the person who is requiring. So thank you very much for coming.
Thank you so much.
Thank you for the entire office team for making this program a successful program. I think at the end we must be interested in knowing the participant, number of participants joined today. In between, I have seen it was around 2,100. I don't know what is the final tally. It is 3,015.
Oh my God.
The final tally. So this is all.
That is a wonderful response.
Due to the popularity of the speakers.
No.
Definitely. Thank
Popularity of the topic, Your Honor.
Thank you.
We will have
so I am at the end. I am asking the viewers to write the topic on which they want us to organize the webinar, so their participation will be a meaningful participation. Thank you. Good night.
Thank you, Team Indirect Tax Committee, and thank you, Ganesh. It was a wonderful experience sharing with you. Thank you. Bye.
Thank you, everyone. Thanks to the faculties, my chairman, my vice chairman, Abstention. Mohitji, can we sign off for the day now?